You are listening to ChartingWealth.com for Tuesday, the 19th of July, 2016. What do we have going on in the market? Well, the overall market is represented by IYY, which is the iShares Dow Jones U.S. Total Market Index Fund. It tracks the entire market, was up on Monday, 0.23%. Now we have, let's see, 5 two-day candles. We actually have 4 since the crossover back on the 11th. When I say crossover, I'm talking about our blue MACD line crossing over the red signal line. MACD is the moving average convergence divergence indicator. It's the big indicator that we use. You want to know what it's all about? Go to our website, chartingwealth.com. We have some great training on there, also available on SoundCloud and at iTunes. You can find everything we talk about here on multiple platforms. Just look up Charting Wealth. You will also see the derivative oscillator rotated over, going in the same direction as the MACD on the 13th of July. We have 4 strong candles of up movement since then. Again, technically, market was up 0.23%. However, the market has been topping out right around 108. It's been that way for the candle ending on the 15th and the new 2-day candle on the 18th. So we've got a potential topping out occurring. We haven't seen it stop yet. We still continue to see the derivative oscillator climb and the MACD go further up. And again, staying away from the signal line. We don't have a converging, so we're continuing to call the market up. But we're paying attention to where the market is peaked out on our Heikin Ashi candlesticks. Again, you want to know what the Heikin Ashi candlesticks are all about. It's one of the latest trainings that we've done, a great training that, again, you can find at chartingwealth.com. Everything we talk about is free. We're not trying to sell you a bunch of crap. Again, our website is not about us trying to hook you into some payment plan or something. Our dedication is to provide education to you so that you can learn how to read these stock charts. We are not a stock calling service. We're not telling you what to do with your money. We're not giving you any investment advice. We are an education firm. We want you to understand the critical need for you, if you're interested at all in making money in the market, learning how to read a stock chart. Whether you're a value investor, you're a technical analyst, whatever it is, if you can't read a stock chart, you're probably going to buy high and sell low. And that is not the way to make any money in the market. You want to find out what our method's all about. We have a 15-minute how to read a stock chart video that's available if you sign up for our newsletter at chartingwealth.com. That will include daily the information that we provide to you, which is our market review, also the weekly review and forecast. If you haven't listened to that yet for this week, you need to, because you need to understand what's going on those weekly charts. Okay, we've got the market in an up move overall. If we look at the 4-hour or half-day chart, again, we can see what I was talking about earlier, how for the last, it's actually going on 1, 2, 3 days, the market's been topping out at around 108.10 or so, $108.10. And we can see that the MACD and the signal line are getting awfully darn close. Derivative oscillators losing a lot of energy. We might see a topping out here. Again, don't have that confirmed yet. Could just be a pullback, but let's pay attention. The market has been going up on our 4-hour chart since the 30th. That is the 30th of June, so continue to pay attention. We're still above the 2-day trend line, but something to pay attention to. Now, let's look at the S&P 500. It's up 0.27% for the day. Lots of up movement there. Crossed over like the total chart did back on the 11th. Derivative oscillator didn't flip over until the following day. We again appear also to have a topping out somewhere around the 216 mark, $216.16. If we go to our 4-hour chart, what do we see? Again, the same kind of thing, topping out starting on the morning of the 14th or so, right around 216.30, something like that. So around the 216 mark, again, for going on 3 days, so pay attention to that. Also, look like we could have a crossover going down on that 4-hour chart. Pay attention to it. Derivative oscillators losing energy, and the MACD and the signal line are getting awfully close together. Okay, something good to pay attention to. Again, remember, still in a confirmed up move. This could simply be a pullback and might give you an entry point if the market continues up. All right. Now let's go to our last index for the day before we get to gold. That is the one that's gone up the most for the day. Actually, gosh, 3 times, almost 1, 2, 3, 4 times what the S&P 500 has gone up. So we are looking at the Qs, which is the NASDAQ 100. It's up 0.66% for the day. And I'm sorry, I'm looking at gold. It's up double what the S&P 500 was up. Lots of up movement for 7 candles, 4 since the crossover on the 11th, just like the other 2 charts. The derivative oscillator crossed over about the same time. Whenever the derivative oscillator and the MACD crossover in the same period, we see that as a much stronger crossover. It has been. There's been more up movement on the Qs. Derivative oscillators continuing to build energy. MACDs continuing to move away from the signal line and up. Strong up movement. Let's track and see what's happening on the 4-hour chart. Again, it's moving up. It really hasn't been holding as steady as we saw on the others. It has actually been moving up, so the up movement continues. Although the MACD and the signal line are very close together, the derivative oscillator actually gained a little energy in the afternoon over what it had been in the afternoon of Friday the 15th and the morning of the 18th. So again, the Qs is tending to move up more and strongly, although it's getting awfully close as far as the MACD goes to a crossover. So we'll continue to watch that, at least on the short chart. Again, still confirmed up movement on the big chart. For those of you who actually jumped in somewhere where you had the red pullback candles and then got in somewhere on the 14th, you probably done okay. And again, we talk about real pullbacks on our MACD and actual crossover in the opposite direction of the big chart and then it moving back in that same direction. Haven't seen that yet. Sometimes it doesn't occur and we can't find super safe entry points. You can sometimes find entry points with the Hikinashi candlesticks and jump in on those. Again, more risky, but more opportunities to jump in. And again, you can practice these things because you're not using real money. You're practicing. You're using your virtual account. If you want to find out what we're really talking about, again, listen to that 15-minute How to Read a Stock Chart video. Now, we're going to go back to our 2-day chart. And lastly, we're going to look at gold. And gold was up with the market over the course of the day. On the 2-day chart, we see a green candle. Again, all the movement on that green candle is well within the down candle for the past 2-day candle. So again, not any strong up movement. Still technically gold is in an up movement. However, we are seeing the signal line getting awfully close to the MACD and the derivative oscillator losing lots of its energy. It appears that gold is getting closer to a down move, but we don't know that for sure. Let's check out what's happening on the 4-hour chart. Of course, the 4-hour chart still in a confirmed down move, what we would call the pullback. If it does cross over and starts going back up again, although it's really just been dragging somewhere around the 126.65 point, and it's been doing that since the 14th. So with the market overall on the S&P and alls looks like it's topped out, gold looks like it has bottomed out. So we'll just continue to watch. If indeed things flip over, gold starts to go up, then we might have a good jumping in point in the upward movement in gold, even though we can see how weak the 2-day chart is. If the 4-hour chart rolls over and starts moving up, then of course we would look for continued up movement in gold. And of course the opposite holds true in our big charts. If they roll over and move down hard, then of course we will start looking for that movement once again if it is confirmed. That is where we are as we end the day on Monday the 18th of July and go into Tuesday the 19th. Hope again you've had a chance to listen to our weekly review and forecast. For those of you who have our trading sheets, or what we call our daily market worksheet, please start filling those things out every day. Use them for helping you understand what's going on. There's nothing like putting pencil or pen to paper. Now people say, wait a minute, I like to do all this online. You can do that, but I'm telling you, there's nothing like physically putting things down on paper. It sure seems to make stuff stick a lot better in my brain. But again, do what you want. If you would like to have the PDF that we've produced of that daily market worksheet, all you have to do is go to the information you get every day in your email. We actually have the link right there. You can also find it on Facebook, at our Facebook, Twitter, and our YouTube channel. We have it all there. So again, easiest way to do it is to just subscribe to this daily podcast. If you want to help us out and appreciate what we do, because we sure appreciate you, we try to provide all this to you every day at no cost. We would appreciate you going to iTunes, giving us a 5-star review, say something nice about us. Make sure you subscribe to both of our podcasts, both the weekly review and forecast in video format and our daily audio that also includes the weekly review and forecast in audio. Also, you want to help us out. This is another big one for you. We're quickly getting to 1,000, but once we get to 1,000 subscribers, I think as of today we're at about 740. So when we get another 160 or so, I'm sorry, that's 260 or so, we will then be at the 1,000 mark. And once we get there, the beautiful thing is we will be able to provide you with proprietary broadcasts to our subscribers. Can't wait till we can do that. You can help us by going to the YouTube channel and simply subscribing. We have thousands listen every week. These are just the 1,000 hardcore subscribers that YouTube requires so we can start doing those proprietary broadcasts, and we'll start bringing them to you. Thank you so much for being with us. You have questions, problems, concerns, let us hear from you. Simply go to chartingwealth.com and email us right there from the website. You can ask questions at YouTube, at Facebook, at Twitter, at SoundCloud, whatever it is, we're there to try to help you. Thank you so much. God bless. Wish you the best in your learning how to read stock charts. That's your road to wealth, my friends.